Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 12th of November, Thursday. So, as usual, in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold falling by 0.63%, the pound fell lower against the dollar as much as 0.33%, the dollar index extended gains by 0.3%, and oil inching lower by 0.92%. So let's get into details with the headlines of today. First off, let's talk about the gold, where we can see gold's fundamental support is currently diminishing. Now the precious gold fell back to its crucial support zone near the 1850 handle, shortly after pairing some of Monday's losses amid the announcement of the vaccine. Now investors are currently shifting away from safe havens into riskier assets as the global risk and uncertainties wane. Now although the large-scale stimulus and loose monetary policy globally continues to support gold prices, market sentiment is now more focused towards the developments of the vaccine. So that said, we are currently waiting for further support such as the US stimulus, where we can see that currently, due to the tensions in the election, currently the stimulus is still on hold and being stalled, thus pressuring gold prices lower. So instruments involved here would be gold itself and most of the other safe haven currencies such as the Japanese yen and also the Swiss franc. Moving on, let's cover a bit on the euro. So the euro fell overall on Wednesday after the European Central Bank warned of further economic contraction for the fourth quarter. Now, according to President Christine Lagarde, recovery outlook remains clouded by the rising number of infections across Europe, where Germany and France were forced into lockdown. Thus, the lockdown will definitely impact on the overall economic activity across Europe, thus pressuring the economic recovery. Furthermore, the ECB noted that while current policy tools prove to be effective, the bank is standing ready to loosen its policy further anytime if needed. So instruments involved here would be the euro. So that's all for the fundamentals. Moving on, let's take a look at the news release we have for today. So please take note, time stated here are GMT plus 8. So the first data will be at 3 PM from the UK, where they'll be releasing the monthly and quarterly gross domestic product and also the manufacturing production. So overall GDP for the third quarter is expected to improve from negative 19.8% to 15.8%. So any reading higher than the forecasted value would indicate that overall economic recovery in the UK is actually doing better than expected, and that will provide support for the pound. Same goes to the manufacturing production. A higher reading would indicate a better recovery in the manufacturing sector, thus providing support as well for the pound. And at 4 PM, the Bank of England will have its speech led by Governor Bailey. So overall, the speech will be similar to yesterday's European Central Bank speech, where we can obtain the latest outlook in terms of the country's economic recovery and also the performance and the recent rise in the infections and its impact. So overall, what investors will want to focus on is what further actions that will be taken by the central bank in order to sustain or to fight against the second and the third wave of the coronavirus. Furthermore, the bank will also most likely address the latest vaccine announcement, and we will expect the same tone to be provided as to the ECB. Now at 9:30, US will be releasing its core consumer price index data, where it is expected to remain same at 0.2%. Any reading higher than the forecasted value would provide support for the dollar. So that's all for the news release. Moving on to the technicals. So here's an overview of instruments to be covered. First off, Australian dollar against New Zealand dollar in the daily chart showing a strong downtrend. For the Canadian dollar against the Swiss franc in the daily chart showing an uptrend. GBPUSD H4 chart uptrend, and for the gold in its H4 chart showing a downtrend. So let's get into further details with the chart analysis, starting with the AUD NZD. So from its daily chart, if we're constructing the Fibonacci from the previous low in March all the way towards its high level, we can see that the pair is currently testing back towards the 50-point Fibonacci near 1.0540. Overall, MACD is signaling bearish momentum with the formation of a death cross. Altogether with the death cross from its moving average, we can see that the pair might be changing its trend to a downtrend. Further confirmation will be required, which is the breakout below the 61.8 Fibonacci. So overall, the 50-point Fibonacci remains as a strong support, so we will wait for the confirmation to see whether or not the pair will be extending its losses or a rebound will be happens shortly after. So cautious investors are advised to consider short positions after the breakout below the 50-point Fibonacci near 1.0540. Stop loss should be placed 30 pips from the level at 1.0570. And a take profit can be targeted 50 pips for all 60 pips from the level at 1.0470. So aggressive investors instead are advised to consider long positions if the pair fails to break below in long positions for a rebound, possibly back towards the support zone close to here at 1.0600. So aggressive investors can consider setting the take profit near 1.0600. Stop loss should be placed 30 pips from the level at 1.0510. Next, for the Canadian dollar against the Swiss franc and the daily chart, now also constructing the Fibonacci from the previous high here towards the low, we can see that the pair is currently testing towards the 50-point Fibonacci and has been rejected, and we can see some shadow forming. So looking back into the H4 chart, we can see that overall the pair does not have the sufficient bullish momentum to extend higher. So aggressive investors here can consider taking a short positions. Stop loss should be placed above the 50-point Fibonacci near 0.7060. Take profit can be targeted all the way towards the 38.2 Fibonacci at 0.6970. However, for cautious investors, you are advised to wait for further confirmation to see whether the pair will be extending its gains or continuing being traded back towards the sideways zone around here. So the further confirmation would be the breakout either from the 50-point Fibonacci or the 38.2 Fibonacci. Next, for the pair of GBPUSD, for the pair of GBPUSD, now constructing the Fibonacci, same from the previous high here towards the low, we can see that the pair has been rejected from one of the support, one of the resistance at 1.3260. So this support remains one of the crucial resistance turn support over here. So overall, the pair showed some technical correction from its high levels, and however it was unable to break back below the 60.8 Fibonacci. So overall, we can expect further long-term upward positions, upward trend for the pair. So aggressive investors can consider long positions at the current level 1.3220. Stop loss should be placed 30 pips from the level at 1.3190, and a take profit can be set targeted near towards the resistance at 1.3260. However, for aggressive investors, for cautious investors, you are instead advised to wait for the confirmation to see whether or not the pair is able to continue its upward momentum, which is the breakout above the resistance at 1.3260 before entering into long positions. Stop loss should be placed 40 pips from the level at 1.3220, and the take profit can be targeted all the way towards the next resistance after the breakout, which is somewhere near 1.3310. Lastly, for gold and its H4 chart, now constructing the Fibonacci from the previous high, connecting the shadow to the shadow, we can see that yesterday's trading has actually led the gold lower, attempted to reach at 0.0 Fibonacci at 1850. However, the lowest level reached was at 1856, and currently MACD is signaling a diminishing bearish momentum. So overall, we can expect some technical correction back towards the 23.6 Fibonacci near 1880. However, cautious investors are advised to wait for further confirmation to see whether or not the gold is able to break below the lowest level at 1850. So from the daily chart, we can see that the 1850 remains as a strong support to determine whether or not gold will be falling in the near term, possibly throughout the remaining time of the year, or would it rebound and continue its fluctuations between the high of 2000 and between the low of 1900. So cautious investors are advised to wait for further confirmation whether it is a breakout from the 23.6 Fibonacci or below the 0.0 Fibonacci before entering into positions for the gold market. Whereas for aggressive investors, you can take the opportunity to enter into long positions as a sign of technical correction. Stop loss should be placed at enter around 1869. Stop loss should be placed 50 pips from the level at 1864, and a take profit can be targeted 100 pips at 1880, or to be even safer at the 23.6 1878. So that is all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.